All right, good afternoon, everyone. Rusty here with Collab Lending. I am a loan originator and one of the sales managers here, and we're going to talk about gifts and gifts of equity, how they can help, but what programs we need to use to structure your deals and to help your buyers or even your sellers here in this case. Let me go ahead and make this big so everybody can go through here. So the goal here is to help increase your business and help more people. By knowing which program can accommodate your gifts and what you need, it helps you to set up either your buyer or your seller a little bit. And my goal is here is to help educate you or your client, if that's the case, so that you know how to help coach them through this. Of course, we do this on every single deal that we have to, or every single family that we help. We coach them through this as needed. Gifts and gifts of equity, what are the difference? The biggest thing, the gifts normally imply that it is a non-repayable a monetary gift to help out someone buy a home. A gift of equity is utilizing equity maybe you already have in the house or a portion of the equity in the house, so that, let's say, if you have a $150,000 home and you only have a $50,000 mortgage on it, you have $100,000 worth of equity that you can utilize as a gift in this case. Interested party contributions or contributors in this case. There are different ones that can or can't, and each program has different guidelines. That's what I want to walk you through today on who can contribute or who cannot contribute in certain cases to make sure we have the right program in order to go ahead and help that client here. So realistically, we know that real estate agents can actually contribute their commissions. Builders, we see quite often, are able to go ahead or developers are able to utilize some of they have wiggle room here, if you will, in order to help contribute and lower those closing costs, as well as we'll talk about any other third party with where we're at here. Familial status comes up quite a bit here on who can gift. Who exactly is family? Normally, family is an easy one, an eligible gift donor, but we'll define who is family and who is not. Other programs do not have any familial status requirements or guidelines here necessarily of who or who cannot. So anybody could gift you in order to help out there. Limitations on gifts. They vary between each program here, and that's what we're going to talk about. Sometimes there's a limited amount of gift that you can give to help with closing costs. Some can be for down payment or closing costs. Some can act as reserves. Some cannot act as reserves. So if we're looking at things like reserves, whenever we're in this case, sometimes reserves are extra months payments that you have in your bank account or as a gift in order to qualify for the mortgage. They want to make sure that you're set up a little bit better depending on some of these programs and how they look at it. So also property types may be limited on what you can gift. Realistically, we're going to walk through each program here just to give you an idea of what program might fit best for your client or for you. Fun facts. So we're going to start out with the wonderful Freddie Mac here, and this is one of the easiest ones. They're the most flexible gifts. So what they do is they allow, they do have some limits here, but they allow the most flexibility with this. So Freddie and Fannie are the two major underwriting that we use for conventional loans whenever we're doing this. And the goal here is to help educate you a little bit on what we can use it for. So whether it's a 1-4 unit, that's normally what we're talking about. Any properties like that. Who can gift, who cannot gift. The fun part that always comes up is that, Freddie allows wedding gifts. Often, whenever somebody gets married, you get lots of checks, lots of large deposits here. Those can all be used as gifts, and there is no limit to it. So that's one of the reasons by knowing which program you're utilizing does matter and who you're actually sending and underwriting the loan through. Another thing with FHA, they actually allow the real estate agent to gift their commission to an eligible family member in order to help with down payment or closing costs. The wedding gifts on here, a little bit different on guidelines here, and a fiance or a fiancee are not considered family members, but there's different ways to get around that for FHA. As we spoke about earlier, some programs do not have guidelines here, so they don't require donors to have familial ties or really any ties. Anyone could be a gift donor as long as they meet the document requirements here that is needed for the underwriter. Conventional loans, Fannie and Freddie. Here's the quick little family status that I'll walk through you with. Spouse, fiance, fiancée, domestic partners, children, other dependents, anybody in blood marriage, if you will, adoption or legal guardianship. That's the easy part here. Whenever we're talking about a primary residence, the borrower can have zero contribution in the transaction. The gifts or gifts of equity can come and closing costs can come completely from the seller here, if that's the case, if they're able to do the gift of equity. Now, in different exceptions here, Fannie requires 5% down on a 2 to 4 unit. So if it's more than one, they'll ask for that. On Freddie Mac, they require 3% of the borrower's own funds. So just a little look at this, 3 to 5%, you can buy a house, a 2 to 4 unit with these programs, depending on which one it is, and to help out there. Whenever we look at borrower's own funds, depending on for a second home, it differs based on how much the percentage wise here on loan to value, whether it's 5 or 0, if it's greater or less than 80% loan to value. With Fannie and Freddie, the other piece here, the gifts or gifts of equity, they cannot be for investment properties. That's the biggest thing that I always get. Hey, well, somebody's going to gift me the money, my so-and-so. They cannot be outside sources. For investments, you have to use your own funds, unfortunately. For interested parties, if the seller has no affiliation with other interested parties, that they're not considered interested parties or affiliation with that. So you're able to utilize it there. And Fannie and Freddie, they don't distinguish guidelines between gift or gift of equity. So they're used interchangeably. Realistically here, it allows, the underwriting to look at this the same, whether it's a gift or whether it's a gift of equity. FHA loans. So these are a little bit more fun when I look at this, who you can't use for family status. And some of these guidelines recently updated a little bit, so it made it a little bit easier on us. But what they will allow is the list here on the left. They can be used for 1 through 4 units. There is no minimum required investment here. So the gift donor can actually contribute up to 100% here. So you don't have to worry about it. The other piece here on the gift of equity, if they have not occupied the residence or haven't rented the residence for FHA for at least 6 months, it has to be at least 15% down or 85% loan to value. So 15% down needs to be the gift of equity, at least at a minimum here, if they haven't lived in the physical property for 6 months. VA and USDA. The only stipulation is that they can't be an interested party in the transaction. Anybody can give with these programs, which is the beauty of it whenever we're looking at it. So for VA, we like to take care of our veterans and go from there. So these guidelines are a little bit looser, as well as USDA. No restrictions. Realistically, they can't be an interested party in the transaction. With USDA, I can't use the gifts as reserves. That's the only thing. They have to have a little bit of money if reserves are required of their own money, just to not necessarily spend it, just to make sure that they have the ability, what we call PITI, P-I-T-I, which is normally monthly payment, principal, interest, taxes, and insurance. That's normally what they're going to count reserves on. How many monthly payments are required by underwriting here in this case? The appraiser must be aware on USDA, and the borrower can't receive any cash back. That's the only thing whenever we get into the rural housing with the USDA. VA, anybody can give gifts. There's no restrictions on reserves or anything like that. It's pretty much open season here. Right now, I have a gift of equity that I'm utilizing here. The granddaughter has lived in the property on an FHA loan for the last year. The grandfather is giving 10% gift of equity, paying all transfer stamps, as well as utilizing 6% seller's assist. Her total out-of-pocket cost on roughly $100,000 loan is about $1,000 for her to buy this home. So realistically, understanding gifts of equity, understanding which programs we can utilize in order to help write that contract for these will help your buyer save money, make sure we can get some more deals in the pipeline, make sure that you can help buy homes, especially when you have family that maybe they're ready to move on and you want to purchase that home from your family. We'd love to help you set it up or help you set it up with your agent. So if you have any questions, once again, I want to thank you for joining us today here quickly. My name is Rusty Rokas. I'm one of the sales directors here in Mortgage Consultant with Collab Lending. Have a great rest of your day.